Somebody leave a comment if you're seeing me. I want to make sure people are here. Now I got 6 people online. Does anyone know how I share my screen? I hadn't thought about that. Oh, well, okay, I'll get started. I don't like dead air. There's Jackson back there. Hey, Jackson. He's looking out the window. This bedroom in my Airbnb does not make the best studio, but oh well. I'll be back to my badass place in Austin. Okay, we're rolling. All right, so let's talk about the Defiance option strategy funds. I don't think you guys can see my screen, but I'm just going to describe what I'm looking at. All right, so let's start with IWMY or Russell 2000. They trade Russell 2000 options. Russell 2000 opened under the profit box and rallied up into it, and now it's right about at the break-even line. So I'm going to check the spreadsheet, see what the spreadsheet says. Spreadsheet says on Russell that we're at a well, the spreadsheet's not updating live for some reason. We'll come back to Russell. Let's look at QQQY. QQQY trades the NDX options. NDX is having a nice strong day and is towards the top of its profit box. So we would expect a full profit or close to full profit in NDX right now, or QQQY, and that's what we have. So we're looking good there. JEPY, we have same situation. They trade SPX, of course. I'm looking at the SPX spreadsheet. We're about halfway through the profit box, so we would expect a halfway profit if the market closed right now. So that's what we have. What a difference a day makes. It was crazy yesterday. Absolutely crazy the past couple of days. All right, I'm going to go back to the live stream. All right, Dan, one Dantown, where are you from? How many people we got here right now? 6 people? Let's talk about some other stuff too. I'm going to talk about one of my favorite topics. I got a comment last night and I wanted to read it on the air. Somebody said to me, and I appreciate all my comments, but I'm going to read my response on the air. Maybe other people will join in the meantime. Somebody said to me, he said, if we have losing days like this and we keep having to cash settle with these large amounts like we've been having to do the past few days, I think I checked, QQQY lost $8 million in the past 4 days. So anyway, they were saying if we keep losing that, how long before the fund can't do cash settlement anymore? And of course, I can't find the comment right now, but I wanted to read exactly what I wrote. Give me just a second. Well, anyway, what I wrote is I figured it out 2 ways. First of all, you can look at it this way. If we lose $8 million like we have this week so far, the fund is worth, and I was talking about QQQY this time, it's worth $268 million as of yesterday. So we would have to have 20 more weeks in a row, just like this week, without ever having a winning week to wipe out the fund. That's one way to look at it. Another way to look at it is, let's say the market dropped 50% tomorrow. Well, the QQQY's assets under management would go from 268 million to about half of that. Let's say we dropped another 50% the next day. We wouldn't be at zero, of course. We would be at about 25%. But then we would still have, 80 million left. Let's say we dropped another 50% the next day. we'd still have 40 or 50 million left because we'd be capturing hella premiums the second and third day when we dropped. But, you know, if we drop 50% 3 days in a row, people are going to have bigger things to worry about than their retirement. It probably means there's a zombie apocalypse, or it probably means nuclear Armageddon's hit. I'm not wishing that, and I don't think that'll happen. I've been watching the market my whole life. I'm 57 years old, or at least for 47 of those years. The worst day I ever saw was Black Monday in 1987, and we lost 20% in one day. And I'll tell you what, 2020 wasn't great either. We lost 9.5% in one day, I believe. That was not great either. All of these covered call funds that were around back then, which is there's a few of them, but QYLD and XYLD are the main ones. They're still alive and thriving. They aren't my favorite funds for various reasons, but they're fine. It didn't take them down. They didn't reverse split. They didn't go broke. They kept paying premiums and dividends the whole time. In fact, they can pay higher dividends whenever the market drops because of volatility coming up. I know I sound like a broken record. I got 13 people online. All right, well, I kind of wanted to open this up to questions. I'm looking down here. I only see one person, one Dantown, that mentioned something, but please, you guys ask me something, or if not, I can just keep filibustering. I love to hear myself talk. You guys have probably noticed that. That's not true. I don't really, but I've been accused of it before. All right, I'm going to look at, okay, so here's some other stuff. Let's talk about some other stuff here. I keep all these tabs open so I can talk about stuff. I have this one tab that I made for just, I was looking at something the other day. So I'm looking at the 3 S&P high yield funds. We have JEPY, which is the Defiance fund. We have FEPI, which is the, what is that, NEOS or Curve, I think. And then we have JEPI, which is JP Morgan. So I'm tracking the percentage change on all of those versus the percentage change on the underlying. The underline's SPX for all of those. All right, so JEPY, and this is if this is updating live. My spreadsheet wasn't for some reason, but the last time it pulled an update, let's just say that. JEPY was off 6 basis points, 6/100ths of a point. Okay. FEPI was off 18 basis points, 3 times as much. JEPI was off 19 basis points, which is also 3 times as much, plus a little bit. The reason those are off more is because they use monthly options. Monthly options don't give you near the downside buffer. Of course, the upside is on monthly options will do better in a runaway bull market. They don't cap as much upside either. Gathering premium, when you're really efficient at gathering premium, which is what the daily options are efficient at, those are the ones that give you more downside buffer. The only way we could have even more downside buffers if they made options that expire every hour and somebody did an hourly expiration fund. I'm serious. I know that sounds crazy, but the daily options are just, I'm more worried about the downside than the upside, just in everything. So that's why I like the daily options more. Hopefully people have plenty of regular mutual funds and regular ETFs, and they do great during runaway bull markets. These funds right here are for 2 things: to provide you income, and they give you a little bit of downside buffer because they monetize the volatility. So how about this? Everyone says daily options are risky. Well, hell yeah, they're risky. Of course they are. They're risky when you buy them. You have all these YOLO people, and I've done it a time or two myself, buying calls maybe at the end of the month and hoping for a big update, or, buying puts whenever the market's cratering. You shouldn't do that. But I'm just saying, it's like a cheap lotto ticket. I've done it before. I think probably a lot of us have. These funds right here monetize people that are doing those things. And that's what else I like about that. The people don't YOLO as much in the monthly series, so those premiums aren't as juicy. Let's see, I'm going to check back in on the live and see what's going on. All right, got some questions here. Perfect. Okay. Hey, V King, I think your first name's, I used to know it. Is it? I saw it. So anyway, it doesn't matter. Anyway, V King, thanks for joining. Oh gosh, I got Mike, the tactical stock scalper, and I hope he was here whenever I was talking about slipping in and slipping out of the profit boxes, because we've done that a couple of times today in the IWMY. He loves when I talk about that, and he also loves when I say Johnny on the ball or when I mix up a metaphor. And I do that occasionally because I get excited. I said Johnny on the ball the other night. I meant Johnny on the spot. All right. Hey, can someone tell me if you guys can see my screen? I'm probably thinking you can't. So next time I'll practice more. Yeah, the like button. You can also gently caress it like you guys do for old Mike, the tactical stock scalper. All right, Glenn, let's see. What's Glenn have to say? You're thinking QQQY will be quite consistent div payouts because it is tied to the NASDAQ. Well, yeah, the NASDAQ, I think it's going to be consistent because more so because it's tied to daily options, which is going to buffer a lot of the downside because NASDAQ can have huge down days, but it can also have huge up days. I think the consistency, here's what I think. I think the daily options are going to make it where it has way less downside and way less upside. During COVID, I always use this example, but in case someone hasn't heard it, during March of 2020, the triple Qs were down like 40% or 42% intraday from high to low. But the QYLD, which is not the greatest fund in the world, neither is XYLD, they use monthly options, but it's all right. They were only down 30%. And I did some calculations based on some defensible assumptions or some assumptions I believe are defensible. If they would have been using daily options, they would have only been down 25%. You know, if you're only down 25% instead of 40%, that may save you from a margin call. That may save you from maybe panicking and selling at the bottom. I mean, you know, or something. That buffer is huge. Of course, like I say, the other side of that is it took QYLD forever to recover because the market went back up so quick. That's where these things, you know, where these things don't do well. QYLD did recover, and XYLD if you consider total return, but I believe one of them still has their NAV never recovered on one of them, maybe both of them. So, you know, NAV depreciation is a real thing and a real concern. I'm not making light of it, but it doesn't happen the way people think it does. You know, okay, let's see. Oh, Dr. T is one of my favorite commenters. What is he saying? Well, he's just saying he likes these Defiance, you know, income ETFs. Well, the guys I make friends with in Discord, they all agree with me, or I agree with them. I guess like-minded people tend to go together, but I get a lot of tough questions in Discord. There's some people on Discord that give me tough questions and that I can't convince, and I haven't convinced so far, and that's fine. I'm not here to convince everybody. I'm just here to do my part. I started this channel when I saw, you know, Retire on Dividends and Rob stuff and some of the other influencers, and they were just getting inundated and dogged by all these questions. You know, when are these funds going broke? This is a scam, blah, blah, blah. And so I got on there to kind of to help them out. But I made my first video, and I was kind of, it wasn't, I don't know, I was pretty direct and stuff. And I figured I was going to get, you know, a lot of dislikes and a lot of, you know, I figured I was going to get a lot of shit for it. But then Tiger on Fire came on there and gave me a great compliment, and then Retire on Dividend did as well. And then I started getting good reactions, and I didn't get one bad comment. And so then I started saying, okay, well, so then I started making videos. So then I started making more and more videos. And then the more I learned, the more I made videos, the more I learned that I didn't know. So I've been learning too. You know, of course, it was a huge embarrassment when I missed the estimate so bad on the IWMY last time. But anyway, I'm over that now. You know, it is what it is. Fun and entertainment only. All right, what else is going on in here? Manny. Okay, yeah, Manny says cannot see the screen. Okay, well, I don't know. I guess maybe I can't share it on the live stream. Maybe I need to go to next time I'll go to my OBS software, which is my screen sharing software, and hit live stream on that. And then I'll be able to, you know, do other stuff and show charts and stuff. This was kind of just to see if this worked and just kind of for fun. Also, I guess if I was in Discord, if I had my own Discord, and I don't want my own Discord, I love the Discords I'm on. If I had my own Discord, I could do it live in there, and then I could have you guys participate and talk as well. So this isn't the best live stream, I will admit it. FBD says he could see the screen on Android. Okay. Chuck, sorry, was in the other room. In case you answered this already, what is the one major pro for owning this and one major con. Okay, I assume he's talking about Defiance. The major pro, and yes, I already did talk about this, but the major pro is the downside buffer. You know, everyone says, hey, they pay such a high dividend. Okay, well, that's great, but the high dividend is what causes, or the ability to capture that is what causes the downside buffer. That's what downside buffers you. But the major con is you sacrifice a lot of total growth. That's why I always tell people no more than 10 or 20%. You have 10 or 20% of your money in here, you know, 60, 70, 80% in, you know, government bonds and corporate bonds and also growth stocks, you'll be fine because you'll get your upside from that. And this will be for years like 2022 when the market, you know, goes down and churns all year, basically goes nowhere. Or years like 2020, these funds did pretty damn well in 2020. Maybe not the NAV. Maybe they took a little while to recover, but the funds themselves did really well. So yeah, Dr. T is saying no screen share on laptop. So I'll have this down better by next time. I just was so excited that I got monetized. And one of the things they said I could do once I got monetized was have a live stream. So I figured, okay, we're going to have a live stream. But speaking of monetized, I'm not doing memberships or anything. I'm doing the same model that I think Retire on Dividends does, which is I think he has super chats or whatever, and that's fine because that's optional. But I would never charge for spreadsheets, and I really couldn't charge for my spreadsheets. They're riddled with errors. I'm just being honest. I mean, and it's not on purpose, but they're getting better. But I mean, oh my gosh, if I tried to charge for my spreadsheets, me and Jax would starve to death. I'd have to, speaking of that, I'm going to go get Jax a bully stick. I had one set aside for this. Sorry about that. I want him to have a bully stick. I saved one for him to eat during the show to try to bribe him to behave. But yeah, that's my theory on monetization. Everything should be optional. It's just more of an honor to me that I got to this level. I remember when I had 100 subscribers and it took me like a week to get to 200, which is still pretty good. But I was thinking, I'll never have 1,500. I'll never have 2,000 subscribers. All I ever wanted to have when I started was how many subscribers Retire on Dividend had. I think at the time he had 3,000 or something. That's all I ever wanted to do. I just want to have a niche channel, kind of like his, where I talk about stuff I want to talk about. Well, now he has 7,000, 8,000, 9,000 people. Anyway, it's not a contest. It's not a contest. Hopefully we all grow together. That's what I'm all about. Okay, I'm glad. So yeah, everyone's saying you can just see me, which is fine. I was hoping I could share my screen so we could look at charts and stuff, but the funds are doing great today. 2 out of 3 are they're all 3 in the winning territory. IWMY is kind of teetering on the edge. It's right down by the break-even line. And since we've been on the air, the market's selling off a little bit, but still, JEPY is in the profit box. Or I should say SPX is in the profit box. NDX is well in the profit box, more than halfway towards the top. And let's see, Russell's the weakest one, so IWMY today. Yeah, Russell has slipped out of the profit box, but not by very much. I'll do my normal update at about 3:30 or 4 where you guys can see, where you can actually see everything. It won't be like this. All right, so let's see. I'd love to answer questions. I was kind of answering some questions in Discord. Retire on Dividends asked me if I was retired. I'm not really retired. I work for a nonprofit, but it's not very hard work. I have a friend that owns he has 4 or 5 sober houses. He's in the sober house business. I mean, he has 20 years sober himself. I have 5 years sober, or I have 6 years sober myself. That's why I came to Austin. I came to Austin to change some things that were going on in my life. And there's a really good rehab down here. But anyway, I came down here and I got my shit together and I just fell in love with the town. I mean, I love this town. I love to play guitar. I love to wear my hair long. I'm kind of always been a hippie at heart. Even though I'm not really a hippie, I tend to be conservative. But anyway, I came down here and just fit in with my personality perfect. But yeah, I do I hustle around and do stuff. This YouTube gig is perfect for me. I just want to make a little extra money. That'd be great. If I do, if I don't, that's fine. But yeah, I was answering questions in my Discord. I've been talking to other people on Discord. We were talking about having a meetup in Austin, and somebody else said, I said, let's go meet at the taco stand or something. I like Tyson's tacos. That's my favorite tacos. And somebody said, well, he said, well, I'll meet you, but I'm not going to have a beer. I don't drink. Then somebody else who's going to meet us said, I don't drink either. Then I chimed in. I said, well, that makes 3 of us. So, oh, well. All right, let's see what else is going on. Chuck S says, thank you. You're welcome, Chuck S. Yeah, V King says, it's great that I'm not afraid to go live. I actually was a little bit afraid to go live, and but anyway, but I'm getting over it. Okay, so mindful prosperity. What do you think about SVOL? All right, I love any fund that sells premium. So I mainly talk about QQQY, but I like all of them. I like the theory of selling options against anything. I really like Maxi. It's a Bitcoin fund that owns Bitcoin futures, but they sell options on the SPX for income. I think they sell spreads or something, but they pay like a 30% dividend, and you get all the upside of Bitcoin. I mean, or of crypto. I don't know. I guess Bitcoin futures. It's up like 200% this year. BITO is another one. SVOL is a fine fund. I haven't looked into it that much, but the VIX, I mean, shorting the VIX is the same thing. It's the same thing. It's a short volatility trade. And you want a stable and non-volatile market, just like you want when you with QQQY. QQQY shorts volatility directly by shorting, index options. But the other ones, VIX just shorts it indirectly. But yes, I love it. TLTW, another great one. I'm fine with anything that shorts volatility. I mean, but the thing is, and I think it's good to have different assets that you short it on. TLTW does it on bonds. Maxi actually does it on S&P, but their underlying is Bitcoin futures. So I think it's good to have a variety of them. Obviously, if you have QQQY, IWMY, and JEPY, and the market dumps, 10% in a day, they're all, that's not really diversity. All 3 of those are going to be down, so that, it is what it is. But let's say you also have Maxi and TLTW. They'll probably go down with the market too. But my point is, in theory, I would like to have funds that short different assets. Okay, I'll give you another one. There's one coming out, I think, by Defiance that's on commodities. They're going to start shorting commodities. I saw it on Panda's channel. I think it's called EEM. So it's going to short, I don't know, there's like 3 commodity shorting funds that are going to short daily options and commodities. So yes, I love diversity between asset classes. And the QQQY and IWMY gives you a little bit of diversity because it's big stocks, small stocks. But heck yes, I love TLTW. I'm kind of bullish on the market. I believe we're going to get some rate cuts this year, or at the very least, I believe the Fed is done raising. And I've had people disagree with me vehemently on that. And maybe I'm wrong, and I don't believe in market timing. But if it is the kind of year where they're at least done raising rates, and maybe it would get an interest rate cut or 2, TLTW ought to be great. So yeah, I'm down with that. But basically, I like the whole class of covered call short funds. That's why I changed my name to the Covered Caller. And I'm going to start a series where I teach how to trade, how to identify good covered calls to do. We're going to paper trade them and also learn how to do them for the first 6 months. And then the last half of the year, I'll do it with my own money. And we'll do it live. And it'll be like a weekly series. I think that'll be fun. Yes, Maxi's expense ratio. No, I don't know how they get that. Yes, I did see that somewhere. But then when you read the prospectus, it's another number that's high. I think it's 0.99, but it's not as high. I think that 11% was based on like a yield on cost or something, or it was based on a different way of calculating it. So I'm not sure. I will look into that, Dr. T. That's a good point. I don't know. Maybe somebody else knows in the comments. Hey, thank you, Mike. I appreciate it. I really do. That's my first. How businesses put the first dollar on the wall that they ever earned. I need to freaking snapshot that and put that somewhere, because that is a big honor, Mike. I appreciate that. And also, I know that I got everything filled out right. Google is so, or just, they're so picky about stuff. If you don't dot all the I's and cross all the T's, they'll tell you don't qualify. So, all right. So I'm going to save that right here. All right. Hey, okay. So I was about SPY. I just got a question about SPY. SPY, okay, I do like it because it gives you even a different type of diversity. The underlying is still the SPY or SPX, just like I SPY, and just like JEPY and JEPI and FEPI. So you have the same underlying. What I like about SPY is I saw an interview with the manager, and they have it in their business plan where when volatility gets super low and compressed, they'll actually turn around and buy call spreads. So they'll actually make a bullish bet. Like I say, I love people that sell volatility. It's great. There are times when volatility gets so low, it's really not even worth it to sell. And I like how these guys have that contingency in their plan. And as far as I know, the other ones don't. They just keep selling it no matter what. The thing about volatility is even though it is occasionally, or even though it does get low and compressed, it's almost always higher than realized volatility. There's almost always some juice in there for people to sell it. But so I like SPY, and I don't know that much about it, but I do know also that they do pay some return of capital, and I know that that's controversial. So I don't know. I need to do a more in depth. I'll follow up on the MAXI expense ratio, and I'll follow up on SPY, and I'll say something about it on my late night show. I'm not going to have the late night show tonight because I'm traveling back to Oklahoma and I'm going to leave early in the morning. So this is in lieu of the late night show. I'll come on with the update, but then probably on Sunday night, once I get back to Austin and get settled in, I'll have a good late night with Max and Jack. What's Jack's doing back there? I should have made my bed before I did the live stream. He's back there just going to town on the bully stick. That's what I'm going to do. I'm going to take any super chats I get, like what I got from Mike, and I am going to buy bully sticks with it. I just like my dog to be happy. If my dog's happy, I'm happy. He's a good little dog. All right. So, Mike, do you feel these funds have overall longevity? Yes, I do. And we talked about that at the first of the thing. I don't think they're going to blow up. I don't think we're going to get 350% down moves in a row. I don't think we're going to get 20 weeks back to back without any winning weeks like we had this week. That's what it would take. So in that sense, I think they have longevity. But no, in the sense of being as popular as they are now, these things got popular for two reasons. One, when everyone got COVID and got free money and got time off work, everyone learned how to trade options. So everyone's an option trader now, which is great. There's jillions more people to talk about it with. And my two best friends back in Austin, they trade options, and they didn't know how to do options, but I taught them. I like to teach people tricks I know. So yes, that's part of the reason is people know and are aware of options. The other thing is these got popular because in 2022 and 2020, fall's been so jacked. These things are paying huge dividends. Once we go into a multi-year bull market again, they won't pay the kind of dividends. They won't be able to keep up the dividends. The good news is the NAV's not going to, people won't be griping about the NAV, but then people are going to be saying, this fund underperformed so bad, I should just have QQQ. And they're right. But what they really should do is have 80% of their money in normal stuff, 20, 10, 20, maybe 30% in these things, and you'll be fine. And that way you're covered. Because you never know if this year's going to be, the next year's going to be like 2022, where vol was jacked all year, or this next year is going to be like 2017 and 18, where vol's compressed, but the market's going straight up. You just never know. I don't believe you can time the market. All right. Hey, Doug, perfect. I got another super chat, I think is what those are, from Doug. That is awesome. Jackson, you got some more bully sticks on the way. Doug bought them for you. Hell yeah, guys. I really appreciate that. It says let's celebrate their first super on the live stream. I don't know how to do that. Oh, am I supposed to hit these things? Oh, I guess I can hit these things too. This is all new to me, but it's really fun. So I wonder this. Do I need to get my own Discord? I don't want my own Discord, but if I had Discord, I guess you guys could participate. Like I said, I don't want my own Discord, but maybe I could use somebody else's Discord or something to do a live. I don't know how that works, but I wish this was more two-sided and not just one way, but this will do great for now. Let's see if I missed any questions. Oh, he's saying thoughts on FEPI. Okay, FEPI. My first thought on FEPI is it's funny how they're trolling JEPY, JEPI. I guarantee they are. I mean, and then Defiance with JEPY is trolling both of them. I think it's funny, the battle of the ticker symbols. But on FEPI itself, I love tech. It's big tech stocks. You know, what's not to like? Yeah, I like FEPI. The one I'm really excited about is Defiance. What's it called? YMAX, and then they have YMAG, and anything that's a compilation. The only thing that scares me about Defiance is the single stock thing. But if you could get a fund of funds where you have all the Defiance funds, oh my gosh. Because how are you going to know 4 months ago that Coney's the one you're going to want and Dewey is the one you aren't going to want? You know, or maybe Tesla. How are you going to know that? You can't know what you don't know. If you had all of them, you'd be set. You'd be making 50, 60% less volatility. All right, Elliot. Let's see. I got another comment from Elliot. I caught this late. Thanks for the short primer on how these funds profit from the YOLO trader. Yes, exactly. They made some money off me over the years. I mean, I don't do that often, but sometimes at the end of the quarter, on a Friday at the end of the quarter, they do what's called window dressing or end of quarter markup. And the market will be up like 2 or 3%. And lots of times it'll get like 1% or 2% of that in the last hour. If there's ever a time to YOLO, that's when I like to get calls. And it's not worked out for me about as often as it has worked out. Don't do that yourself. But yeah, it's a real deal. YOLO traders are a real deal. All right. And then Downtown said he sent me a PayPal. Perfect, guys. I really appreciate you guys. I swear to goodness, I have the best subscribers. And I don't really know if it's me because I think I have the same subscribers the other influencers that I like have. I bet you we have like 90% of the in common. But anyway, we have just a great community here with these high yield funds. And I really feel like people are starting to get it more. You know, they're still dissenters, and I'm open to listening to dissenting opinions. I mean, there are bad things about these funds too, but anyway, I really think that I'm doing a good job, and the other people in the community like Mike, Tactical Stock Scalper, Retire on Dividend, Rob stuff, Kamir, doing a great job at getting the word out there. I almost thought about naming my site the Option Evangelist. I just want to get the word out there how cool options are, and when you sell them, that you can win 2 out of 3 times, and you can put the odds in your favor. Okay, so I'm getting some more comments. This is great. How many? I got 35 people on. This is awesome. This exceeds my wildest dreams. All right, so I got another comment from Bake. Is it okay to keep 25% of your investment portfolio on JEPY and 2.5% in IWMY? Well, I'm not a financial planner. I don't know, but my opinion is no more than 20 or 30% of your overall portfolio. So let's say you have a 401k at work and it's worth 400,000 or something. You know, it'd be great if you had your own little Roth IRA. You can put $7,500 a year in it, and you built that up over the years. And you have, say, if you had 400,000 in your other retirement, let's say you had 40,000 in these stocks. It would take you 5 years to get to that or something, but that's I think would be ideal. All right. Like I said, check with your own planner, all that kind of stuff. Okay, Mindful Prosperity. This is one of my favorite commenters as well. Thank you. I cannot wait for that series. Do you recommend a beginner's option course? Okay, funny you should say that. Let's talk about that. I started recording my beginner's option course yesterday. I had no idea how hard it was. I'm still editing it. And I say stuff, and then I contradict myself on accident. I'm going back, I'm listening to that, and I'm thinking, how is anyone going to learn from this? But I'm getting it worked out. Yes, I'm going to have a beginner's one. At the very start of my beginner's video, the first thing I do is I recommend 2 other beginner's option courses. And I'm not going to make you guys wait for it. I'll tell you, the guys over at S&B Capital, that's a prop fund in New York City that teach people how to trade options professionally. You can trade on their desk, and they don't hire you if you're an idiot. They test you out, and they teach you how to do it. They have some of the best content on the internet. And I put a link to it in my video that I haven't released yet, but check out S&B Capital. And also, there's a guy over named Kurt at Option Alpha. He has a really good basic course as well. So I would start with those two. And I would really start with S&B Capital. They have a guy that's no nonsense. When I'm teaching, I tell stories and I go off this way. And I think some people like that because I give good analogies. But this guy at S&B Capital is like, he's like a no nonsense, by the book. He's very clear. He's very organized. They have two guys. There's a guy named Mike, and I forget the other guy's name. I love those guys. And they have an option, a beginner's course that's an hour and 45 minutes long. And I watched it. It's not actually a total beginner's course. You have to know a little something, but it gives you a good foundation. Option Alpha has a total beginner's course. So I would start with those two. And then I'm gonna make one as well. Hopefully I'm hoping it'll be out early next week, because I'm doing cover call. I'm doing buying calls one day. Then I'm doing buying puts the next day. Then the next day I'm doing selling calls and puts. So that's 3 days. Then on the last day, I'm going to talk about spreads and combinations and covered calls. So I need to do 4 days of that. So ideally it'd be Monday, Tuesday, Wednesday, Thursday. Then on Friday, I'm going to do a screener. We're going to pull up a screener, and I'm going to look at which covered calls have the most potential income. I may even put a YouTube poll. I may do a video and then put a poll and ask people which ones we should do. And then we'll put that one on Friday for next Friday. I'm just going to do 1 week at a time. And we'll put on a weekly cover call, and we'll paper trade it. And then the next Friday, we'll look at doing another one. I mean, that's my idea right now. That all that's subject to change, but that's my idea. I have some other comments. Jackson, what's going on there, buddy? What's going on? This dog's so good. He's a good dog. All right. Let's see. I have another comment. Doug said, my play on the yield max is to look at the underlying stock they are playing for IV. And if I'm bullish on that stock, whether it be Block, PayPal, Coin, Amazon, I buy yield max. I buy the yield max variant. Absolutely. But I would also hope, there's nothing wrong with that, but also maybe have some triple Qs so you get some exposure that's not capped on, in case these things go up another. I mean, the triple Qs were up 55% this last year. Yeah, they don't pay a dividend, but my Lord, 55%, that's a hell of a good year. Doesn't mean they'll be up this far, this much next year, but you definitely want to have some normal funds. But sure, 10, 20, 30% of your money, absolutely buy these, and then you have some nice income. I was telling someone the other day, this might stop, in the old days, you could only get 2 or 3% on dividends, sometimes 4 or 5 if you bought AT&T. But these funds might be able to keep somebody from having, maybe a guy like me that's semi-retired, maybe having to go take a job at Uber or something. These funds, if you had like a $500,000 retirement package and you had like $100,000 in these funds, they don't really pay 60%. They do pay 60%, but after you figure out the net asset value moving around and stuff, you figure you net 20% or something. So you could clear 20,000 a year on these, and really maybe a little bit more, but you can put that in your pocket. That's a part-time job. Maybe your wife's a school teacher or something. You can tell her to retire. These funds are changing the way people retire, and that's one of the main things I'm excited about. I may have that all wrong. I'd be willing to listen to dissenting opinions on that. And they do make 50 or 60% yield. That's true. But the yield is a gross number, not your net number once you factor in the other factors. But in the perfect environment, yeah, they can make that much. Look at JEPQ. It made 36% total return this year, where the underlying made 55%. That's pretty good. And not only that, they also paid you a 12% dividend. So you have 12% of that in your pocket, but they still appreciate 36%. That's really good. I think something like that is more realistic for budgeting. Is count maybe 10, 15% in your pocket and try to get 20, 30%, 40% overall growth, and you're golden. All right, so let's see here. I get excited about these things. Vivek said, I love dogs and my wife hates him. What to do? I love my wife to death. Yeah. I have a really good ex-wife. She is a sweetheart, and we both love dogs. Let's see here. Scott Bauer at Prosper Trading Academy is helpful on option basics. Okay, I will check that out. I don't think I've come across that one yet, but I will check it out. I'm watching other creators' option courses to get ideas on how to find the best. Like I say, I tend to go off the path a little bit. I tend to be, a little bit like Matthew McConaughey when I'm talking about stuff. But anyway, I think some people like that. I don't know. I'm enthusiastic. I think I make up with my enthusiasm what I lack in my clearness and conciseness. All right. Dog sitting, get paid for watching dogs that go back home. Yeah. Oh, that's what you do? That's cool. That is cool. Jax actually has a cool story. Hey, Jax. He was adopted to be a service animal. You may have seen, I still have a leash that says service dog in training. Anyway, Jax is a great dog, but he didn't work out to be a service animal. I have a friend that is disabled, only has one leg, and went and got him. And Jax is a great dog. He's like a good emotional support animal. But my friend Jax is high energy and kind of has some bad behavior sometimes. And my friend just couldn't handle it anymore. I didn't want to see Jax go back to I love Jax. So I'm watching him. And actually right now I'm in Oklahoma visiting my friend. So Jax is with both of us. So we kind of share custody, but I raised Jax because Jax just did not work out great for being a service dog. All right, so let's say here, Metal Gamer. Okay, I really like Metal Gamer. I forget if I know you from Discord or from the comment section or both, but we've had some great conversations. Do you have the name of the DC dollar cost average study? Oh, yes, one of my subs mentioned in last night's video. I do. It's in my email. I wonder if I can get to that without screwing up everything. Let me see here. I probably can't. See, the thing is, I have all my YouTube stuff under Max Convexity, and then I have my other stuff under my other stuff. And I'll tell you what, what I'm going to do is I will do a YouTube, not a video, but I'll do a YouTube, like a post. I'll put that in the post. He actually sent me a couple studies, and they were great. I listened to them last night before I went to bed, or I listened to one of them. I need to listen to it again. It was a great study. I do know it was by a website that I really like, and we think of the website's name. The website's name is called TOS Indicators, TOS Indicators, and these guys are quants, and they show you how to do quantitative analysis with Swim tools, and they have custom scripts, and they try to sell stuff to you, but they have some really cool scripts that I haven't bought. Anyway, it was their study. So you could go to that. You could go to TOS. You could probably find it that way, but I will post that. I will follow up on that. All right, Anthony. I got a comment from Anthony. He says, the other day you talked about creating a synthetic short to hedge against these funds. If you do this, what happens with the distribution? Would you have to pay it because of the synthetic short? All right, that's a good, gosh darn it, if that's true. I've always heard that the person that sells a put has to pay the dividend. That's a damn good question. Right, Anthony, that's a damn good question. Let me follow up on that. Okay, you could also just buy a put on the underlying index to hedge. Oh, that's the deal, though. In my synthetic short, you're buying a put and selling a call. So I don't think you would owe the dividend. I think you owe the dividend when you sell the put, right? Yeah. Anyway, I'll follow up on that. But yes, that would be a bust. Yeah, that's not that wasn't my goal to try to end up owing the dividend. It's basically what's called a no-cost collar, where you sell a call to pay the put. The problem with doing those on these high yield funds is the market makers know that they decay also. The market makers also know that every time they pay a huge dividend, it comes out of NAV, blah, blah, blah. They factor that into the option prices. But I have a way, I still have some advice on that. I did a little bit the other night, but that topic is so juicy. I think I'm just going to make a complete video about it, and I'll make sure to have my I's dotted and T's crossed before I do that. That would be very embarrassing to do that. I won't make that mistake, Anthony. That's a good That's a good call. Okay, you can buy the put on the underlying index to hedge. The way I like the caller is because you know exactly, once you do a caller, you know exactly what you're going to sell it for. And it's going to be less because the market makers charge more for puts than they give you for the calls. But then when you factor in the dividends, which you don't know exactly what the dividends are going to be, but you estimate them, you can turn this into like a bond, turn it into truly a fixed, where you don't have to worry about going up or down. But yes, if you just bought the put, even though it'd be more expensive, you would not have to, you could still get some upside if something like Coney happened where they actually got upside, or some of these other ones. So that's another way to do it. And I'll present both ways to do it. And I got the idea from Jay. Jay said that it's legit. That it's legit to hedge. But Jay did mention, he said, don't buy, like he was talking about Tesla, but said, don't buy a put on Tesla because there's times when Tesla goes up and Tesla still goes down. You might end up losing on both trades. I was looking at just buying using the caller, putting a caller, a no cost caller. It's not really no cost, but putting a caller on the high yield fund itself. I'll do some studies and get my act together before I present that for real, though. But I appreciate your interest. I'm excited about that. All right, Vivek, another comment. If a person is busy, isn't it the best strategy to invest in index funds? You said that's always yes. Okay, it's dangerous to say anything always because, in a sideways or down market, these high yield funds will outperform an index fund. But I'm talking over any period of time, over a year, 2 years, 3 years, because of the market's tendency to drift up. Just having index funds and regular type investments will outperform on a total return basis. But remember, it's not always about total return. Sometimes people are willing to sacrifice a little total return or a lot of total return to put some of the money in their pocket right now. It depends on your needs and stuff. I need to do a study on that. Okay, V King said maybe like the box ETF using the box strategy. Okay, yes, that's similar, that's a similar theory. I didn't invent the no cost collar trying to hedge it. There's other people have been doing it. So yeah, that's similar as well. I need to look more into that ETF because I looked into it once and I couldn't really find that much about it. But yes, I'm trying to do the similar type strategy for sure. Anthony said thank you, and I appreciate it, Anthony. Thank you for watching. I was thinking maybe if there's no more questions, I'd take Jax for a walk and I'll follow up on this other stuff. I appreciate you guys for staying around so long. There's 39 of you guys online. I have 25 likes. That exceeds my expectations by far. Not to mention, I had 2 super chats and somebody PayPal me, and I really appreciate that, you guys. You don't have to do that, not at all, but I do appreciate it. I do appreciate it. I'll get Jack some more bully sticks. I went and bought bully sticks yesterday, and he's almost through with the whole thing because, anyway, I always joke that Jax is a terrorist because sometimes he'll cry unless he gets his way. And, of course, that's why he does that is because I give him his way. I should hold my ground and not give him the bully sticks, but anyway, I love him. All right, so Doug says, thanks for the love and safe travels back to Oklahoma. I'm actually going from Oklahoma back to Texas, but I appreciate it. In either event, I'm going to leave. I'm going to leave like at 4 o'clock in the morning. I'll be back in Austin and, by 8 or 9 in the morning. And then hopefully my channel will get back to normal. It's been kind of crazy down here at the Airbnb, and Christmas Eve, the people upstairs are real noisy. And anyway, but I'm really looking forward to getting back in my regular type activities. 40, I hate to get off, the number keeps going up. Anyway, I-35 traffic hell. My condolences, correct. I go through I-35 through Fort Worth because it's not as bad as Dallas. I take I-35 west, but hey, Rob, what are you doing, man? Rob, I love Rob's live streams. He gets on there when he's charging chill or whatever, and I usually wear his comment line out. And I never done a live stream, so I didn't realize sometimes the person talking can't answer as fast as you can type. So I've learned to slow down. But now that I'm on the other side of it, but no, you guys have been great today. No one's done that to me. But on my late night show, to be honest, I get comments in so fast, and I'm not recording it while I'm doing it. I just broadcast live and sit around and ask questions. But I'm really getting better at typing. I have a jacked up hand. I was cutting open a bag of bully sticks for Jackson. And I cut my tendon. And so I have anyway, I'm also a guitar player, but I can't hold this up naturally anymore. So my typing, it's never been great. I've always been fast, but I used to be a lot more accurate. But now that I have this kind of lazy finger, I know I need to go get it fixed. I have great insurance. I could go get it fixed. Procrastinating like I do everything else. And actually my guitar playing is unaffected. I've learned how to adapt. I have problems with the F chord, but everyone has problems with the F chord. So I play it in different positions. Oh, well, someday I'll play guitar online, or yeah, Rob plays guitar. I love playing guitar, and I just love playing guitar. I'm not great, but it's kind of like options. I know a lot of option theory. Not the greatest trader, but I could tell you any theory in the world. Same thing with music and guitar. I could talk minor sevens, minor nines, chord progressions all day long, but I'm never going to be at the, I'm never going to be opening for, for Black Sabbath or whoever. I don't know Black Sabbath, but they're still around. I'm never going to be jamming up there with Eric Johnson. He's my guitar hero. He lives in Austin. I found out where he lives, by public records, and he lives out in a place called Westlake, which is the nice part of town, but it's also kind of in the hills and stuff. And he has a nice, modest house that's on stilts up on a hill. It's beautiful. Oh my God! But yeah, I just dream of going to HEB, which is our grocery store here, and bumping into Eric Johnson. There's also another guy that lives in Austin that's a hedge fund guy named Chris Cole that I also want to bump into and ask for a job. I'm going to do a video about Chris Cole. He's a genius, and I'm going to do a video about he has what's called a dragon portfolio, and I'm going to do a really good video about that. But I adore both of those guys, and I always fantasize about running into them somewhere out on the town. But yeah, Rob, we ought to share guitar stories. HEB does rule, Metal Gamer. Metal Gamer, are you from Dripping? Is that you from Dripping Springs, or is that? I've been talking to someone either on I think that may have been you, but I don't remember. Anyway, Dripping Springs is also where all the nice houses are. Dripping Springs, Westlake, Terrytown. Oh no, from San Antonio. Okay, well, San Antonio is wonderful. Also, I went there and met my dad, and my nephew graduated from the Air Force Academy, but the Air Force basic training this summer. I went there for his graduation, and we had family flying from all over the country, and we stayed in an Airbnb, a lot nicer one than this. But yeah, we had a blast. San Antonio is always a blast. We went out to the Pearl Brewery, and and we did all the touristy stuff. But oh my gosh, it's such a good time in San Antonio. This whole Central Texas, this hill country, this area, just if you haven't been here, you don't realize. I don't think people realize. I always wanted to live in LA. My whole life, I wanted to live in LA or New York or somewhere where everything is happening. I want to be somewhere where the concerts are always going on, like live shows in Las Vegas, LA, somewhere like that. Well, I didn't realize just a few hours down the road, there was a place just like that in Austin, Texas. Yeah, everything is under construction in Austin and in San Antonio. Growing pains for sure. For sure. All right, guys. Well, I think I'm going to let you guys go. I don't want to wear out my welcome, but I appreciate each and every one of you guys. I'm going to take Jackson out for a walk. He probably needs to go potty by now, and he's probably going to beg me for another bully stick. But hey, now that I got those super chats, I'll just go to the store and buy him some more bully sticks. Jackson, you're set now, buddy. Hey, guys. All right. Well, I appreciate it. I'll try to remember to follow up on all those things. I'm gonna look into into Maxie's expense ratio. I'm going to post the study, and there was something else I was going to do, but I will do all that, and I will follow up. Yeah, you have a great weekend too, Doc, and hopefully I'll see Dr. T and the rest of you guys on my Late Night with Max and Jack show Sunday night. Maybe I'll do it live too, or maybe I'll record it and just answer questions live. But in any event, I hope to see Dr. T there. He's always there. And some of you other guys in here are always there too. I've recognized some other names from my late night show. Like I say, I appreciate each and every one of you guys. Thanks for everything. You guys have a great day. And I'll when I get back to Austin, I'll post something, let you know I got there. And I'll probably have a video out tomorrow or the next day. Maybe I'll have that options course ready. All right, guys. Have a good one. Thank you very much.